Welcome back. Okay, so I mentioned in a previous video that, broadly speaking, accounting can be divided into two types of systems: cash basis accounting systems and accrual basis accounting systems. But also there's another way to divide accounting, and that's in terms of financial accounting versus managerial accounting. Now, financial accounting is focused on the financial statements. It's focused on providing accurate financial statement information for consumption by external users principally. I mean, yes, management is going to use the financial statements, that's true, but financial accounting is really focused on providing accurate financial information to external consumers, such as creditors, banks, lenders or potential lenders, potential investors, auditors, and government regulators. Okay. The important thing to take away from financial accounting is that it is GAAP compliant. There's that word again, GAAP. What does that mean? Generally accepted accounting principles. We'll talk about that very soon. But financial accounting is focused on providing accurate financial statements for use by other people in making investment decisions or business decisions with them. And as a consequence, heavily GAAP driven, GAAP compliant. And the benefit to that is if all your companies that use accrual basis are GAAP compliant, everybody's playing by the same set of rules. Nobody's winging it or coming up with little rules and processes that they're using only in their own little world. Financial accounting, the accrual-based companies, they are GAAP compliant and they're all playing by the same rule or set of rules. Now, managerial accounting, that's a different field, a different branch of accounting. There are no rules. And why? Because there are no external consumers of this information. The consumers of managerial accounting information are the internal business decision makers, the managers, the supervisors, okay, the executive staff, the VPs, that kind of thing. They're focused on budgets, estimates, and allowances, approximations, that kind of thing. So they don't have to be as accurate as in preparing their reports as the financial statements have to be for accrual basis companies. So again, managerial accounting, non-GAAP compliant. Okay, like I said, they pretty much make up their own rules. But again, the information is only being used internally. No one else external is relying on the accuracy of that information. So managerial accounting, much more flexible, focuses on budgets, estimates, approximations, allowances. Users are internal, non-GAAP compliant.